What's up, guys? I'm Mike from Stocked Up, and welcome back to the Stocks with Mike and Tom show. This video is going to be a little bit different than most. Basically, what we're going to be doing is discussing what our plans are for this election that's coming up next week and what we're doing in the market to protect ourselves from this event and just how we're trading it. So, Tom, I know that the election is going to be very volatile. It's making the market very uncertain and almost panicky, you could say. I mean, we saw the market down a little under 6% this week. And basically what's been happening in the market this week is investors are selling off because they just want to de-risk themselves from holding through this very uncertain election. So what are your thoughts on the election, without getting too political, and what are you doing in the market?
Yeah, I mean, it's really confusing heading into elections for a lot of traders, and especially a lot of traders who are new to the market and have never experienced an election before. And a lot of times heading into the election, the market actually likes to dip and then possibly rise, once someone actually gets elected. And that just shows a lot of certainty coming into the market whenever people buy after the election. And like you said, a lot of big investors are really hedging themselves now, or even cutting positions heading into the election just because of the uncertainty. And right now, it could really go either way. And both candidates are pretty much drastic in one way or the other. So pretty much like Trump's going to cut a bunch of corporate taxes, and Biden's going to tax corporations pretty hard. So, there's just two different spectrums here, and whichever side gets elected, I think is going to really dictate which way the market goes. And really, I think heading into the election personally, I'm playing VIX. I like the VXX calls personally. That's the play that I really like. And they didn't perform too well to end the day today. And we can see that the SPY actually popped up at the end of the day, which was concerning for a lot of people because there's a lot of people in Discord holding SPY puts and stuff like that. And it's just one of those things where whenever the market's like this, the market is always going to be swinging like this up and down very parabolically, because it's just something that happens whenever you're heading into the election. And that's why I like VXX, because I just think a lot of volume and a lot of movement is going to happen over the next couple of days, especially Monday and Tuesday.
So for all of our beginner viewers, basically the VIX rises when the market becomes volatile. So if the market's especially if the market's falling and options prices are rising, the VIX goes up. So just a simple understanding is when the market's falling and there's a bunch of volatility, the VIX skyrockets. I made a video a week ago, so last Friday, explaining the VIX in more detail. So I think that's a solid trade that you have there, Tom. Of course, it's risky, so I don't want anyone to think this is a safe trade. I mean, Tom will say it himself, this is a very risky trade.
Yeah, extremely risky. And the good thing is, though, is that if the market does end up going down, then VIX will go up. But the good thing is, though, is that you're looking to get in long-term positions, or at least I am. And whenever the market goes down, I'll really be looking to grab some tech stocks and possibly stuff like that if we do see the market head down. But just keep in mind, there's only 2 days before the election, so I don't see the market tanking like 20 or 30% over the next 2 days. It would be a week or two out for that.
Yeah, I mean, there's no way that's happening. But it's a high risk, high reward trade you have here. If the market tanks, then this thing's going to explode. If the market just kind of doesn't do anything, or if it goes up, then the trade's it's gonna kind of screw you over. But
yeah, I mean, if the market goes up, the VIX could easily, or the VXX calls could easily lose 50%. Let's say VXX opens up Monday at like 25.50, those calls could easily be down 50% if you didn't get enough time, or if you had just bad options that were expiring a few days, or maybe next week, like 11/6. And those are personally the ones I got were the November 6th ones. And it's just really a gamble. And just like everybody's been saying lately, it's just a straight gamble. I mean, you don't know which way it's going to go. And you could see the VIX was even flat today, even though the market was generally down, at the beginning of the day. The SPY really fell, and you kind of would have thought the VIX would have popped a little bit more even.
Yeah, so just to highlight, nobody knows what the market's going to do right now until the day after the elections. No one knows. I mean, that's why there's so much uncertainty, and that's why a lot of people are selling out of the market. Like there's just so much uncertainty, and no one knows if the market's going to skyrocket, if it's going to tank, or if it's going to do nothing. No one knows. So personally, what I'm doing, and everyone should do something different depending on their age, their current portfolio, their risk tolerance. So personally, I want the market to fall so I can enter in some great stocks at a great price. I'm sure a lot of other people are like that. But the thing is, the market might not fall after elections. It might skyrocket, it might go flat, or it could fall. So what I'm doing is I'm going to buy some near expiration calls. And basically what this is going to do is put me in a win-win scenario. If the market tanks, right, I don't mind losing on these calls. I'm not going to get in too heavy. I'm going to take a small position on SPY calls. If the market tanks, right, that is in my best interest. I want the market to tank on this election so then I can buy in stocks at a lower price for the long term, right? That's my goal. But if that doesn't happen and the market skyrockets, then I'm at least going to get paid in some sort. So no matter what happens, it's kind of like a win-win in my eyes. My main thing that I want is to enter in stocks for the long term at a great price. That's my goal, right? Obviously, I want the market to fall for this election, but if it doesn't fall, then at least because I have SPY calls, at least I'm going to make money off that. So that's how I'm justifying the trade. Remember, like I said, the main goal is I want to get in some great stocks for a great price.
Yeah, and one big thing that I have actually a big question about is what about IV heading into the election? I mean, we can see that on SPY, the IV is really creeping up as we're heading into the election, and obviously the SPY is starting to fall down, and that's indicative of why the VIX has been going up. But a big reason, a big thing I'm worried about is almost like an IV crush after the election, almost like earnings or something. Like imagine if the market started flying up right after earnings, there'd be a huge IV crush, or right after elections, and there might be a big IV crush there. And it's just something that, you know, the market's expecting a lot of volatility. And I think that implied volatility will get, at least if not crushed, it'll actually fall a little bit, at least after the election.
Well, that would actually hurt your VIX position, Tom. So
It would actually. But the good news is I could sell it before the election, of course, hopefully.
Right.
That's what I'm hoping for. Hopefully I don't have to hold that past the election, because, you know, hopefully the market goes up after the election. But of course, you know, we want it to go down to get into long-term positions. But of course, you know, we don't want to see a lot of people get hurt by the market falling. But it's just a thing that whenever you're trading, you have to expect the market to fall, and you almost have to play off of that. And that's why I think a lot of people are hoping the market gets down, is just so that they can get into those positions. But we're not trying to say that like we want, you know, people to get hurt or anyone's 401ks to get shot or anything like that.
Yeah, absolutely. So, you know, we don't want anyone to get hurt with the market potentially falling, but it's all about, you know, just preparing your portfolio and making sure that no matter what happens, you're protected. So, Tom, I think you have a great strategy, high risk, high reward. Obviously, I explained what I'm doing, calls, SPY calls, the near expiration to kind of put myself in a win-win scenario. If the market tanks, then great, I'll be able to enter in some great stocks at a great price, and I don't mind losing on the SPY calls because I'll be entering light. But if the market does skyrocket, then at least I'll be able to generate a profit from that. The worst thing that would happen in my scenario is if the market was very flat, and I think we could both say the same thing, because if the market was flat, then, you know, obviously the implied volatility would fall, and that would crush your VIX position.
Yeah, for sure. I mean, everything's gonna fall if the implied volatility stays the same as far as, or I mean, if the market goes flat as far as options go, and that'll really hurt people. And I'm really looking for the VIX to pop pretty largely. I mean, I'm looking for it to move possibly like to 28 or 30. So we would need to see a pretty big fall out of SPY over the next few days, I think, for that. And, you know, it's just a straight gamble. And I don't want a lot of people to, you know, watch this video and then go out and spend 2 grand on SPY calls or anything like that, or on VXX calls. Like, please don't. I'm in a very small position. I only have 2 puts, so it's not like I'm, have a huge exposure right now or anything like that. I'm really just looking, just to make a quick play. And a lot of people say it's gambling, but just keep in mind that I've done a lot of research on it, and it's really in my best interest, and I got pretty good pricing. So if I do lose, it's not going to be the worst thing in the world.
I think the biggest thing is position sizing. Like you said, you're not in this trade heavy at all. Like you barely have a position. You only have you said 2 VIX calls, right?
Yeah, 2 VIX calls. I think it's totaling maybe like $500 total or something.
Yeah. So, a $500 position might be someone's entire portfolio. And if that's the case, you might just want to get a cheaper, a cheaper contract, even if you want fixed. But I think just the most important thing is sizing, obviously, with, the total risk. You never want to over leverage, but obviously just obviously, 1, the sizing, and 2, doing what's best for you.
One thing I just wanted to say really quick is that if you have a small account right now, like so small that, a VXX call or a SPY call, and if you lose on that, it could possibly wipe your account out. Possibly don't trade that right now, because it's really a gamble. You don't know which way it's going to go. And, if you have a small account, that would really suck if you got like a SPY or VIX put or call and then lost on it, and half your account got wiped instantly, because if you have a small account, it's just not very smart to gamble on stuff like this right now.
That's another great point. If you have a small account, now is most likely not the time to be trading. But another important thing is you have to do what's best for you in your portfolio. So what's best for my portfolio probably isn't what's best for your portfolio, and what's best for Tom's isn't best for mine. So it's all about doing what's best for you. For me, in the way that I'm approaching this election, the main thing is I want to get in great stocks for the long term at a great price. If that doesn't happen, I at least want to make some money. So that's why I'm doing the SPY calls just as a hedge. So the main thing, do what's right for you, and don't over leverage ever.
Yeah, ever, especially right now. I mean,
right
now is the pinnacle time. If you ever had to not over leverage, right now is the time.
Yep, agreed. So thank you guys so much for watching this video. I know it was a little bit different type of video, you could say, but Tom and I really just wanted to get our point across, and just especially the 2 main points. Don't over leverage, and do what's right for your portfolio. Just because I'm getting SPY calls as a hedge and Tom is getting VIX calls, that doesn't mean that it would be best for your specific portfolio. And at the end of the day, Tom and I are essentially doing the exact opposite trades. Tom is basically betting on the market falling, and I'm basically betting on the market rising. Obviously, it's a hedge for me because I want the market to fall so that I could get into my position for the long term. But just understand the risk of taking any trade in this market. It's very uncertain. But besides that, guys, we hope you enjoyed the video. And as always, if you have any questions, let us know in the comments down below. But other than that, thanks for watching.